If you cannot tell the difference between rent, double net, and triple net, you can lose tons of money on your next investment and make the wrong investments moving forward in your investing career as a commercial real estate investor. Because every kind of rent is not made equal, and there's so much misconfusion about what makes a good asset and what makes the rent prices best for you. I see it happens every single day. I'm going to break down to you today in this one quick video about what to expect, what to avoid, and how to make the best investment moving forward in your next deal. My team's done $1.6 billion transactions over the past few years, and I've seen so many people get burnt and not understand what they're doing from these three main categories. Now, when you look at rent, normally people would think about this. Is this going to be our gross rent? Gross rent means that you have pretty much all the responsibilities. You are in control of all the major expenses. So you pay for insurance. You pay for taxes. You pay for the CAM. And the list goes on. If anything breaks, you are responsible for that. Now, for those who are new, CAM means Common Area Maintenance. Now, for some of you that are watching, you probably think to yourself, well, yeah, of course, this makes sense. Like, I have a house right now, I have a tenant, and they pay me my rent, which is just the gross rent every single month, and I'm in charge of my taxes, insurance, CAM, miscellaneous, and more. Which sounds pretty common. But this is why commercial real estate is so powerful, because this, honestly, only really applies to a few different kind of asset classes. Multifamily is one of them. A lot of times in multifamily, you will see this being here. You'll see this happening in some offices. Not often, but some offices. Industrial. More often than not, though, when you're doing this for this gross rent, the main goal behind that is to have really, really simple infrastructure. Like, hey, I know that if I buy this asset, I have to deal with all different things. But the problem is, if insurance increases, if property taxes increases, if your maintenance, roof falls apart, you will lose so much cash flow by having this setup. Now, a lot of times, though, it's pretty common, and also it's based on the tenant type. So this is what to expect to look at this gross rent. Next on our list, this is double net. Double net is a little more, attractive than just gross rent. When it comes to double net, they're going to be paying for the insurance and the taxes, and of course the rent. So gross rent is being paid for, they pay for taxes, and they're paying for insurance. But still, it sounds really attractive, it sounds really sexy, but the problem is they don't pay for the CAM. They don't pay for the structural issues, they don't pay for the outside areas. They only are paying for the insurance and taxes, and any repairs that happens is on you. And a lot of people get this wrong because they say, okay, double net is still better than gross rent. What's the big deal by taking on these asset classes? And they're not bad. The problem is, if you do it the wrong way, it can cost you lots and lots of money. Typically, when you see double net, you'll find this in offices, in single or multi-tenants, or really, really common areas for this. Smaller retail offices is also kind of common for this too, for this common double net. But the thing to keep in mind, especially if you're trying to have predictable income, is this only really works on newer buildings. If you're investing in a building that is like from the 70s, 60s, 80s, that has not been upgraded lately, then you probably want to avoid doing double net. That means that you are responsible for the CAM. It does not mean that it's going to be totally risk-free. And on that point about totally risk-free, our next one, this is my favorite kind of rent to get, obviously, is our triple net. Or NNN. It's also the other name we have for it. Now, a lot of times when people see triple net, automatically think, great, I have no risk. It's not true. You have tons of risk still, but compared to this gross rent and double net, of course, most of this is gone. For double net, they're paying for the insurance, they're paying for the taxes, and they're paying for the CAM. It's a common area maintenance. And that will also change based on the asset. Now, if you're doing like a Starbucks, for example, they'll pretty much be fixing everything for you. Like they'll fix the outside, they'll fix the interior. Well, your main role is going to be the roof more often than not. And structural damages will be your responsibility, which is a risk. Another risk too when it comes to triple net is to be, lease turnover. Every so often, after 5, 10, 15, 20 years, that person will be moving out or renewing their income, renewing their term with you. That will cost you money. You have credits as well. Credit is also another risk that you can probably see a lot of times. Tenant credit risk, vacancy rents, and sometimes, of course, there's capital expenses as well for fixing different areas. Now, I do think for triple net, what matters the most is the quality of your tenant. If you're leasing to somebody like a Starbucks or a big company that you know is going to be around and pay their bills, you're probably pretty safe. But triple net is like to a coffee shop or to a bar or to a car mechanic area. You may have harder times. So don't think that just having triple net by itself means you're totally safe. There's still bad and wrong investments. And that's just talking about the rent prices. Now, you talk about the asset itself, that also changes everything. Up above, a whole video breaks down every asset class out there, at least the major ones. There's more context on that for you too. But of course, if the building is old, or if it's in a small area, think secondary or tertiary markets, you may have a hard time, even with triple net. Now, when you're looking at this though, I want you to really take this home. There is no right or wrong way to invest in your commercial assets. If you buy with the right numbers, you find the right assets, and you have good tenants, you will have a successful career investing in commercial real estate, whether it's gross rent, double net, or triple net. It all comes down to really understanding what is happening. Now, for a quick recap for you, I know we did a lot super quickly. Gross rent is out of the sound, so this is paying you rent, and maybe sometimes they're paying for your utilities themselves, but more often than not, you're probably covering some of that or doing a pass-through, and you're still also involved in insurance, taxes, CAM, and miscellaneous. Think multifamily, think offices, industrial sometimes as well. Mostly multifamily is going to be the biggest one though for gross rent. Next on our list is double N or double net, which is they pay for insurance, taxes, and rent. Think offices, small retail, single or multi-tenant areas. And again, it all comes down to this one being super important, not investing in older buildings that you're responsible for if it falls apart. That can totally destroy all your cash flow and appreciation. And the last one is triple net. They pretty much pay for everything. It's not risk-free, but it is a better strategy for you. But again, there is no right or wrong. It all comes down to your strategies, your risk tolerance, your management style, the kind of tenants you want, and also, of course, your deal structure. And I think when you understand all these together, it makes your life so much easier. And if this was helpful for you, you're going to have more context in the whole process. Over here, the whole video breaks down for you the A to Z on investing in commercial real estate, from finding deals, sourcing deals, and the whole 9 yards to make you the best investment moving forward with no guesswork, and also not overspending money. And if that's like too much work for you, you want to have more support, down below, link in the description, have a call me directly. If I could not save you at least 5 or 6 figures, we work for free. And so far, all my clients have saved the minimum of pretty much 5 or 6 figures. Almost no one has never said less than 5 figures with us before. And we do all the hard work for you, from sourcing deals, underwriting deals, the whole 9 yards, make your life as easy as possible, and make you the biggest return on your next investment without having much risk involved. So that sounds good? Down below, link in the description, the first comment, have call me directly. But as always, thanks for watching. Down below in the comment section, let me know, what is your favorite kind of lease to have in place? Do you like gross rent, double net, or triple net, and why? Love to hear your feedback down below in the comment section. But as always, make sure you hit the like button, subscribe, tag your friends, give us a share, and I will see you at the top. Thanks for watching, and glad to have you here.